Hi, and welcome to Trendy Options. This is Jonathan, your host and your moderator and owner of Trendy Options. Before I get started, I just want to kind of give you the why behind my story and what it is exactly that I'm here for. So first thing, why come here? Why come to Trendy Options? I will tell you, I believe that the room itself is probably one of the most transparent rooms out there on the market, and I say that with experience of being just like you, being in rooms when I first started and so forth, and what it was that I was looking for in rooms, and some of the things I didn't get from them and some of my experiences kind of led me to, opening my own room and being able to share with you with what I thought, what my experience was not enough transparency. And, I was more of a cheerleader and I didn't fully trust the trades I came across. And when I did trust them, I tend to pick the wrong trades. I mean, I can't make this stuff up. So, I mean, I was the guy that would go into a room and say there were five trades given, and I would pick, you know, this moderator. Let's just say they had four wins. I happen to be the guy that picked the one trade that I lost on, and it just happened to be that. And the more and more I would lose, the more apprehensive I would be to take a trade. And so when I took a trade and it did go green, I got out right away. Like it didn't make sense to me. And so no matter what I did, I still lost money. What I want to do for you is kind of give you the background of the system that I'm using. And I mean, I want to be 100% transparent with you. It doesn't always work, it works a lot. You can't change your mindset. You always have to be strong. You have to believe in what you're doing. And when the opportunity presents itself, you have to be ready to strike. You have to be ready to execute. Okay? I'm going to teach you and show you in this first part, in this one of three videos, how we're going to get there and how we're going to do it together. So, again, thank you so much for coming into the room and being a part of Trendy Options. Thanks for believing in the transparency and for what I'm doing. And I very much want to teach you how to trade. And although I don't recommend 100%, blind trading rooms, and I don't want this to be a blind trading room, so I'm offering this to you for free. Whether you signed up just for alerts or you've signed up to come in and watch me trade live and listen to me rant day in, day out about patterns and, execution, just everything that I talk about on a daily basis. Okay. And so thank you again for doing that. The first thing I want to show you is just, your basic what Trendy Options does, what I do, what John does when I trade, and that is I always take trend into consideration. Okay, so I want to take Roku. I have Roku here on the chart, and we're just going to kind of start here from the get-go. And I've done so many different videos where we set up, and I want to show you, from a monthly standpoint into a weekly standpoint of what I'm looking for. Okay, so let's go ahead and clear this drawn set. And this is impromptu. Okay, this is not by any means have I practiced this or looking to show you. Sorry, I have not practiced this, and so therefore it's impromptu. And if it doesn't work out, then I'll take you to another chart to give you more details. But Roku is pretty hot right now, and I want to look at it from a monthly standpoint. Okay, so the overall trend, when you see this, is very simple. We have higher highs, okay, and we have higher lows. So you can say from looking at this monthly candle formation that we are in an uptrend. Okay, very, very straightforward here. Okay. All right, couple other things. I always look at supply and demand. And then I also have my own indicators called trendy edges. These edges are not specific supply and demand, but they are around supply and demand. Okay, so basically on this chart, what you're seeing, these are yearly edges, and the upper ones are supply, the bottom ones are demand. Supply is where you sell, demand is where you buy. All right, and I went to school at Online Trading Academy, and I learned a little bit while I was there. Thank you to Online Trading Academy. They give me a little bit of insight how to think, more or less try to think like institutions and big money and not get sucked into retail. Okay, the retail mindset, if that makes any sense. Okay. So, oh, and before that happens, let's go ahead and go over here to ES. I'm currently actually in a position, and we will, let's see, active trader, and there we go. A quick $125 on this, and we'll get over to talk about money management and targets and so forth, and I'll kind of show you how we get to that. Okay, and this is a real account. This is not a paper trade account. You can see up here, PDT, pattern day trader. That's what I'm labeled as. I am a pattern day trader. And what that means is basically I have more than $25,000 in my account, and there's specific rules that I have to abide by in order for things to work out under the BDT. Okay, let's go back over here to Roku. Sorry to get off track there, but I did get an alert, and that alert told me to look over there. Okay, so that's what I did. All right, so over here on Roku. So again, we're on the monthly chart. We have higher highs and higher lows. This looks fantastic. And so from a monthly standpoint, I can say, hey, this stock is in an uptrend. The next thing I want to do is show you on this chart. Okay, we're going to talk a little bit about supply and demand. We're going to talk about trend and a little bit of my system that I'm using. Okay, now when I went to OTA, back to that, I learned a little bit about candle formations, and I also learned about how to think like big money and institutions. Okay. Now, when I was in the school there, they specifically talk about how, because I run my own company, I can't go out and tell you exactly what they've taught me. That wouldn't be fair. So one thing I will tell you is if you ever have time, please check them out. They have a really cool 3-day course that you can do, and I think they do a 1-day course. You'd have to check out their website to see exactly what's going on there. But yeah, so that is, OTA, and there's also some cool websites out there. Like if you go over to, just go to, um, if you come over here to, online, and you take a look at YouTube, and you just kind of plug in formations for supply and demand, you'll see that supply and demand formations, they rock. I mean, once you learn them, it's very straightforward where you want to take a trade. Now, without giving you too much formation, what I could tell you is right here, this is a 3 pattern formation for demand. You wait for price to come here, and when it gets here, you take the trade to the upside. Imagine that. Set yourself an alert. Price comes down. It looks like I had an alert quite some time ago and might have missed that just by a few pennies there. But, either way, we've been making good money in Roku trading options and so forth. So anyways, we identify some demand, you wait for price to get there, you take the trade. Okay. Now, where do I want to go from a monthly? I want to go to the next thing I want to do is look at a weekly. Okay. So let's go ahead and take a look at the weekly chart here. Okay. This is your weekly chart. And these lines that you see on here, these are called EMAs. And the EMAs that I have set on here is a 9 EMA, a 22 EMA, and then a 44 EMA. Okay, and we'll talk about those a little bit later. All right. So on the weekly, you can see here that, for anyone that's just starting out, it's up and it's down and it's up and it's down. And what you want to start doing is looking at this and trying to what I would call pattern recognition, like really understand, okay, this is daily, or sorry, this is a weekly candle. So for each one of these, this represents a week in the stock, okay? And so in this, all right, each week we can see we've made higher highs and higher lows. And if we compress this together, no matter how we look at it, this is bullish, we are headed up. Okay. And then I want to see, okay, well, if price were to come back down, where would I want to get in? Again, I would go over to demand and supply, and I check out, what does demand look like? I could see here that this is demand, and I could set myself up an alert. And this is one thing that we do over here at Trendy Options is I have 2 alert systems. I have a triggered alert system, which is really cool. And what it does is I can come over here and hit create alert. Okay, and then I can say at or below, and I could say right here, Roku, entering weekly, okay, demand. And what this does is it sends the alert to the room and also to private Twitter simultaneously. So I have a gentleman who has hooked up my alerts from Thinkorswim straight to our members, which is really, really cool. And we'll get over to that here pretty soon. But see, the alert goes here, and when price does reach these alerts are sent over to the room to let our members know that, so and so has happened. So let me just kind of show you what that looks like. So right over here in the alerts section, you can see trendy alerts, and these will go off. For example, it says alert on JLL when market at or below triggered mark weekly demand. Okay. So this lets traders know who've watched the video and understand supply and demand that they may be wanting to look for a long position there, or maybe even some calls if you're an options trader. Okay, so pretty neat thing that we do there on our alerts. Okay, so still looking at trend here, let's go ahead and take it now from a weekly. Let's go ahead and take a look from the daily. So just to recap here, I like going from the monthly to the weekly to the daily to understand what I'm looking at before I decide to get into this car and drive it. You really need to understand the bigger picture before just jumping into a trade. So when I take this to the daily, we start to see different candles. We see a lot more candles, right? The picture starts to look somewhat different, okay? And you can see here all these red candles. Whoa, you know what I mean? That was not a good time to be in Roku to the long side, but if you understood where price was coming into for demand, then guess what? This is payday right here, okay? And we teach that. We teach you how to look for these setups, and then we teach you how to execute these, okay? All right, so here we are on the daily. Things are looking pretty good. We're making some higher highs, some higher lows from this last recent rally. And that's what we got here on Roku. Okay, so we've looked at the monthly, the weekly, and the daily, and I think it's safe to say that Roku is pretty bullish. All right, now I've talked to you a little bit about demand. Hey, demand is where it's pretty simple to understand. Okay, it's like if you were to go into, say Mercedes, right? I love Mercedes cars, and you want to buy your next AMG. Do you want to buy it up here where it costs $100,000? Or do you want to buy it when it comes down to, for sale at $80,000, right? I want to buy it when it comes down for sale. And so in order to be that person, you got to wait until the sale hits the market, right? And so it's the same thing when we run out of buyers in the market, the price of the candles must come back into where they know people want to buy the stock. All right. And just like anything else, as I would say, I live on the beach here in Florida, and I will tell you, depending on who you are, depending on how, what your weight is, the heavier your footprint is in the sand, right? And just like in the market, we leave behind a blueprint. And those who have lots and lots of money, they leave a footprint or a blueprint, right? In the candles. And we can identify those and we wait and we want to be on the right side of the trade following the bigger money. Okay. And so that's what we're trying to do here. So again, trend all the way from the monthly, weekly, daily. This looks like an uptrend. Everything looks pretty good. We've identified some areas. You can see here I also have an alert here at 80.23, that I'm looking for price. If it were to come back here, I'd probably be interested in taking a shot to the upside. Now let's get over into, what it looks like on the intraday. Now I do tell traders, now work yourself into a 4 hour as well. Okay. And what we're doing is we're kind of narrowing down a range that we would like to trade. Think about it for a minute. Time frames are so important. If you're a trader and you're only trading on a monthly time frame, then you expect, your thesis on what you want to trade to it's going to take a while for it to develop. Okay, monthly candles take a month to develop. Therefore, if you're only paying attention to a monthly, you should probably be looking at a swing trade, right? If I'm looking at a weekly, then I'm probably expecting the trade to develop within a week to 2 weeks or something like that. And if I come down to a day, hey, This trade might actually take only 3 to 5 days before I actually make some money. Now, the same thing with hourly, right? And you just break that all the way down into, whatever you find that works for you. Maybe you look at a 15-minute candle. Maybe you're looking to make money in from 15 minutes to 2 hours. Okay, so but we always want to be paying attention to the trend. So we're going to be looking here. This is a 4 hour. We can, break this down into 2 hours, 1 hour, and you get the point. We know that it's an uptrend here, and we know, hey, I want to take this. Now, what you should be asking yourself is, well, where does price go? Where does price go when we don't have candles up and to the left of us? Right? So in order to understand supply, there must be something that's up and to the left so you can look at candles. Just like when price was down here, folks, and it moved up, I could be looking over here to be concerned about, hey, where do I want to get out for targets? We're always using candles for targets. But in this case where we don't have candles above us, I use what's called a Fibonacci extension. Now that would be in a whole different video, but really quickly what I could do is just kind of show you, what would that look like? And for me, it might look like something like this. This gives you some Fibonacci extensions. I can mark these on the chart here, and to get some of this out of the way, this is just a hypothetical target here for you. But let's say we took this trade, right? These would be my targets to the upside. All right, 102, 115 respectively. And let's now get over to, hey, what if we want to take this for the next day? I love Roku overall. It looks like it's trending up. Now, what do I want to do from here? Well, at Trendy Options, you should know this if you're a member. We use what's called the line in the sand. Some people call it a cash close. Mine is developed a little bit on a candle, a certain candle pattern, and that certain candle pattern is usually like plus or minus just a couple pennies from the cash close, typically. Okay, and you can see here we closed at 89.98, and it looks like today my line in the sand is 89.99. So what we're looking for here, all right, now we're getting to the meat and potatoes, is after we look at trend, we want to think about entry, execution, and how to ride this trade. How are we going to stay in this trade, right? And all that really depends on you as a trader, right? A lot of traders complain of getting out of their winners too fast and letting their losers go too long. Now, I would be sitting here lying to you if I too did not have that problem. I have that problem just like anybody else, but it's one that you can learn to control. And so I want to show you that. How do we control this? Okay. So line in the sand, what we're looking for tomorrow in this name in Roku. Let's say we get a little gap up in the market. Okay. This is representing a candle. Say that we get a little gap up, price moves up, and then we wait for our strategy to develop. We are patient traders at Trendy Options, and we wait for the test of the line in the sand, and then we are looking for a certain candle pattern. Nice little base off of the line in the sand, and then we're looking for higher highs. We take the trade off of this. We put our stop underneath, depending on your risk assessment. So, whether you're just an equity trader, that means you would just trade shares, or you're an options trader, we would put our stop under here. And let's just say that price was at 90.35 and this was 90 under here. That would mean you have a 35 cents of risk. If you bought 100 shares, right, and you have 35 cents of risk, that would be $35. Pretty straightforward, okay? And then looking up here into those extensions that I gave you earlier, those would be your targets. So let's just say this is going to be your target up here and say it was $92. You know, it looks like this. What we do here at Trendy Options is you keep your stop here and we ride this up, okay? Now, how do you ride this up when things start doing this right here? And sorry about that. I told you it's impromptu. So, let's do this one more time. Does this and then starts coming down, right? And then we're looking for this pattern, higher high here. Take this, put your stop under here, and then we have our targets up here, and say this again is at $92. Okay. Now, what happens when price starts moving up and you start getting excited, but then you're like, oh man, it's coming down. What do I do? Right? This is where most people take the trade off instead of obeying their stop down here. And then they find something like this just an hour, 30 minutes later, couple hours later, you see something like this. And you're like, oh, why? Why did I do that? I do this every single time, right? You know you do. I know I used to as well. So look over here. You have these little EMAs, okay? You have these EMAs. And these moving averages will help you stay in a trade. So what we're looking for on these is once taken the trade, depending on your risk assessment, we want price to stay above these moving averages for the day. If you're an intraday trader and you're only looking at 5, 15 minutes, just kind of depends, again, going back to the time frames that I was telling you about, depending on your needs for income, depends on the type of candle that you're looking for. If I was trying to take a swing trade, something that lasts more than a day in Roku, and I was only looking at a 5-minute candle, and the first time that it fell below one of these, I got out just to see this happen here, I would probably be pretty irritated, right? So these change depending on the time frame that you're looking at. So if I were to come over here to a daily, okay, so we took the execution the way I showed you, but then you come over here on the daily, you might want to ride this thing until it comes all the way down and it closes underneath the green. Then it's no longer valid for your entry. Okay. But again, a smart trader would have to look at this and say, okay, John, well, I want to ride this, but I'm looking at this green line and let's just predict that it stays here and price comes back. It's at $84 and I bought at 90, that's $6. I have 100 shares. That means I can lose $600. You're exactly right. Okay. But what we do know is when we're in a strong trend, we tend to be able to ride these EMAs and they work out pretty well. Now, for some traders, they like to wait until price comes back into one of these and then they attempt to take a trade from that. Now, in another video, I can show you how there is confluence here because, immediately when I look over here, there is a demand zone and the EMA is writing in there, the trendy edge is in there. And so we have a lot of confluence that gives me the confidence to take a trade there. Okay. And so all of this should be able to come together. So again, if we come back over here on the 5 minutes, like most day traders, okay, not all day traders, they're looking for money in the day, right? That's why we're called day traders. We're looking to get in and out pretty quickly depending on the market conditions. Now, I get this question a lot. Hey, John, I've been to a room, or this is, my experience is that, I get into these rooms and people get in and out very quickly. But I'm looking for something for a little bit longer. I got a job, I'm busy, I got kids. Like I just want to be able to get into a trade and I want to be able to swing it. Look, folks, if you're looking to swing trades, you have to be in a position where you're understanding what the charts are doing, and that's why I want to teach you. I want to teach you this and I want you to pay attention. I want you to ask questions so that when you're out and about, you can be looking at your mobile, and you could say, okay, things are looking pretty good. You could be monitoring the room and you're like, hey, things are going well. I feel comfortable about staying in this position. That's what I want for you. What I don't want for you is to freak out. I don't want you to blind trade, and just think that, rooms are magical and a room can make you millions of dollars. That's not how it works, okay? And the word million is pushed around so many different times, and really it's not about uh, a million. I mean, even to make, $300 to $500 a day would be absolutely um, great for anybody out there. I don't care who you are. If you can make $500 in the first few minutes or the first couple hours of trading, then that's what it is, right? And I want to teach you how to get there. So when we're looking at Roku, Okay, again, on that entry for an entry trade of 5 minutes or so, 10 minutes, 15 minutes, basically I've shown you the trend is up. Okay, we're using the line in the sand as a gauge to get long. And when you go back and study, you will find that price likes to come into the line in the sand and move up. Okay, and then these are our buys, and we want to stay above our moving averages. You can come back here, you can see here, this is the line in the sand. You can see here, this is the line in the sand. This is from 1 week ago, and we continue to move up. All right, so here is again, trend is up. We're using the line in the sand as an execution. The line in the sand again is a candle pattern that we look for that's automatically put on our charts, and the next morning we're going to trade off of those. Okay. Now again, why come here? Because I'm going to teach you how to identify all these areas, how to trade off of them, how to stay in the trade, and how to make the trade without me telling you. So, I mean, isn't that exactly what you're looking for? Do you really want to be in a place where you're paying money, but you never learn how to truly trade? My job is not to try and keep anybody over an X amount of time. My job is to help you become a better trader and therefore giving you the independence and giving you the independence to make as much money as you can by yourself. And I want you to be able to look back and say, "Hey, he really he really put a lot of time into that, and now I'm a better trader because of that." Okay? So, now, let's go into just some basics of what we're looking for. And I'm going to go over to what we call the white screen here, and I just want to show you this is the market. Okay, whether you want this to be a weekly, a daily, it doesn't really matter. Okay, it doesn't really matter. You know, say this is, where they sell off, you know, these little red candles in here. Um, what we find is at the origin of a move, that would be here, we're going to call this zero. Okay, and to the end of a move where it starts to top off and then we start to move down. Okay, and then you do something like this. Let's call this 100. Is that around 88.7% of this move? You're going to create supply. And at some point at the origin of this move, okay, the opposite side of that, okay, looking at about 15% of this move, which is about, right here in this area, and I'm going to make it red, is your demand. Okay. We're going to draw this box. This is your demand. This is your supply. When price moves down into demand, we are looking to get long. And this is where price magically moves back up. Now, in between here, at about 50% is where 50%, let's go back over here in a second. I heard something get taken out. Over here at about 50% is what we call relief rallies. And typically the 50 of an entire move is where price bounces as well. So before it got here, you usually get what's called a relief rally. Okay, now this is just standard operations for a regular chart for trading. Okay, very straightforward. Okay, so again, we create demand at about 15% or so. Okay, and if you were to turn these around, you could call this 88.7% to the downside. And up here, you're creating supply, 88.7% up here. Okay, and this is where price tends to peel away. Okay, very straightforward. And I'm going to show you that again, but let's go over here and see what happened on the ES. And you can see here, quick $250 off of the, and we'll go back and I'll show you how this worked out. And this is something that we do here in the room. This is a blueprint, and you can see here right off of the LIS, we got the indicator. It rode the nice trend here. The reason why I sold is it right here came into supply, and kind of what I'm showing you. And we will come back here. I would expect price to potentially maybe pull back here out of this blue box, but I'm going to get to that here in a few minutes. So let's just go ahead and come over here one more time. And I realize how ugly that picture was, so I want to draw it again. Look, this is the move. Okay, we create demand. Okay, and we create supply when we start to roll over. Now, a lot of different organizations and so forth will make a lot of different uh, remarks or education around this to make it very complicated. What I want to do is show you how to identify these ranges and then identify a very simple process of what we call demand and supply. Remember, so around the 50, and we'll make this yellow, and here we would call this a relief bounce. Since the trend is up, okay, trend is up in this situation here, okay, trend is going up. You can see here that when price rolls over, typically what is going to happen at the 50 is we get a relief bounce. Okay. And again, in another video, I will go into specifications for this, specifications. But then price rolls over at some point, and guess where it goes? It goes to where people want to buy the stock. And that, my friends, is around the origin of the trend move that we are looking at. Okay, now let's go over to a real chart and kind of show you. So what we expect here is a move out of there. And then I will teach you how to find your targets so that when price gets there, you're able to get out. When price gets there, you're able to get out. How do we ride this? We stay on the EMAs. When do we get out? At the targets. Very, very simple process. I will teach you the candle formations that we're looking for to stay in trades, and I will teach you candle formations to get out of those trades. Okay? Very simple stuff. All right. So let's go over here, and let me go ahead and just, give my room a little bit of this. Okay, and there's that. Let's get out of that. And let's close that. Going to get over here. Okay, and I want to show you this on a chart. Now, I want to tell you I'm using a script here that colors the candles. They're kind of wonky. But what you're looking at red candles, basically it's saying the momentum's down. And white candles, it's saying it's neutral. And then when we start to turn green, we're saying the momentum is up. Okay? So pretty straightforward to understand that. Now let's just go ahead and take you back over to Roku, since that's what we were looking at before. And I want to be able to identify really quickly with you, one of these ranges, where can we look for range? Well, like right away, here is, this was today, the 23rd of May, and you can see here, if we were to draw this for you, let's get the pivot high. I think this was probably the high of the day, and this would be the low. Okay, so just like what I was showing you, and just to give you an idea that what we're doing is we are in an uptrend here, okay? And you can see that price started to turn around at some point, and then it went down to here. And you notice here's the line in the sand, okay? Now, I'll teach you all about Fibonacci's in another tutorial. But here we go. We're going to go from that pivot high, which was right there, until we started turning back. And notice where we started to round out here was around the 50%. That's exactly what I was showing you. Now, again, this is for an intraday trade. I'm looking at a 5-minute candle. It wouldn't matter if I put it on a 30-minute candle or not. It still came back to the same amount or percentage of that range. But what I want to tell you is you can identify these on all time frames. It depends on what you're looking for in your trade. So for Roku, okay, so for Roku, we can identify that here, let me go back here like this. You could see here there was a low of 1575 right here, okay? And if I were to show you the pivot high, which was right here, is where it started turning around, and this is where this guy IPO'd, you can see, okay, that price from here to here is a range, right? So it just depends on what you want to do. You can also do it from right here if you want to. So let's do it a little bit closer so you guys understand. So what I'm looking at is this low of $15.75 and this high here, this is the range that I'm looking at from here to here. Price rolls over and then I'm looking for it to come down about 50% or so. Now, again, as a disclaimer, doesn't mean that it always works, folks. Okay, but I'm going to teach you how to identify supply and demand and how to have confluence with all of this to understand that, hey, John, okay, I'm looking at the daily, it's starting to pull back. I'm looking at the 50, should I buy here? Yada, yada, yada. And then I'll give you some insight on how to determine if this is going to set up to be a highly probable trade to the upside here. Okay, and you can see here it did move up. Again, this is all impromptu, and I have not looked at Roku for this demonstration, but I want to, I want to show you this. And so let's see what happens there. So again, we're looking here. So our point of references, just one more time so everybody understands, is this is the pivot high. This down here is the pivot low. Okay, and right here is where price turned around. So what we're going to do is we're going to measure from the pivot high to this pivot low of about 1575. Might be kind of hard for me to get to. And you can see here that price moved up and it actually um, it actually, let's see here. Oh, I have it around the wrong way. Sorry about that. You're supposed to actually start from the low, 1575 up to the high here. And you can see here, price actually came all the way down to the 618. And I teach you about all the different fibs and so forth. The 618 is called the golden Fibonacci. Basically, it's a trend change. So what it means is from pivot high to pivot low, that this trend, this uptrend, is not broken unless we start to close underneath the 618. And as you can see, it never did, fully break here, and then we popped right off of that. All right. And I'll teach you about all that fun stuff. But this is just how we identify. And within each one of these, you can identify different ranges. Okay, so for example, if we were to come over here to the current range, okay, and I want to draw on this so you guys understand what ranges look like. This range here is down, okay, and then this range from here, it goes up, and then we kind of go sideways, and then we have a range from here to here, then we kind of go sideways, and now we're starting this range. So all of these are different ranges, and you can apply this technique to the most recent range. So the most recent range is going to be this pivot low to this pivot high. So let's just kind of, we don't like to predict or speculate. I mean, there is speculation in trading, but I want to just kind of hypothetically show you from pivot low to pivot high, okay? And we identified a little bit of demand down here earlier. You can see in this case, if price were to, this is the trend we're looking at, pull around to the 50 or 618, right in this area, it's right confluence with some demand. So we'd be looking for price to turn around there. Okay, so this gives us a target to the downside if we start to roll over here. So just like we can make money to the upside, we can also make money to the downside. And that's what's amazing about learning a strategy. A lot of new traders always think that you can only make money going up. And so some new traders who come into the industry, they're absolutely floored when you can tell them you can make money to the downside as well. So not only do we teach how to make money to the upside, we teach how to make it to the downside, and we also teach how to make it when markets are going sideways. That's right. You can make money when the market is going sideways as well. And I will also be teaching that on a very I would say on a pretty continuous basis is one of some of my favorite strategies are called iron condors and so forth, and we'll talk about those soon. But this first video again is just kind of giving you the why behind trendy options. The transparency that I have, the education that I give you. It's what I do. And I teach you how to trade. And these are just some of if I could sit here and make a 45-minute video, 1 hour video on everything I do just in one video, I would be an absolute beast, right? But the truth is, folks, I am not going to be able to give you one secret sauce in an hour and be able to, turn, say you're coming here from a very bad experience. What I'll tell you is I won't be able to turn you around with just a 1 hour video, folks. But just from the stuff that I'm showing you right now, it would absolutely blow your mind just using some of these easy techniques. Um, the other thing is that, you know, at some point, I like to talk about psychology of trading and getting into the part of what's helped me. And as easy as it sounds, the best way to approach trading is to be very robotic and use a system that works for you. And just because it's not working for a week, 2 weeks does not mean that your system's wrong, folks. It just means that it's not your time to trade. And that's one thing that traders have a really hard time with. Even for me, it gets really stressful, right? Running a room, it's like, hey, how do you, right? How do you stay, you know, how do you stay focused, John? Or I want more trades, right? You're not trading enough. I need some more trades. I know how to identify when it's my type of market. When it's my type of market, it's time to trade. When it's not my type of market, I'll typically, maybe put on half a position, what I normally would, and so forth. It's just not, it's great to be a good reader of the market and how to identify when it's your time. Okay, and we'll get into those kind of things as well. But again, just kind of going back over what I'm showing you folks is I look at trend. Okay, I look at range. I just showed you how to use some range. Um, I look at risk to reward. So how do we get risk to reward? Let's go ahead and look at Roku here because I want to teach you a couple things here. This is Roku, and let's say that I want to buy Roku at $84. Okay, so on the equity side, I can simply come over here and do what we call a bracket order. And let's say that I want to buy, I don't know, 125 shares. And I want to buy it at 84 and the back of this is at 81. Let's just call it a $3 risk. So right here where it says stop, I'm going to put a 3 in there. Okay. And I'm going to hit enter and say that I think, this stock is going to go up to, 15 more dollars from where I buy it. I'm going to make this a 15. And so you can see your risk to reward is I could lose $3 on 125 shares. Not $3, it's 3 times 125, folks. All right, so for every share, I could lose $3, 3 times 125. But my potential reward here is 15. Now, you can't just arbitrarily go into the market and be like, hey man, I got a strategy, risk management here. Just click the button. And that's where traders have a hard time. You have to be patient. So my patient trade is here at the demand level and I want to take it to the upside and I want 15 bucks for this. I want 15 times 125. So I just come over here, I set this up, okay, and I want it at $84. So I scroll this thing down here. And this is it's aftermarket right now. So the only thing I'm trading right here is for futures and we're just going to plop that up there right there. Okay. Now what this does is you can see it creates a bracket order. Now I had a target up here at 102. I can slide this up to now we want more than 15. We want like 20 to the upside. And I want to make sure this is, outside of where I identified. So I have this set up like this, but not too much, right? You don't want to get too crazy because remember, we only want to risk, you don't want anything less than like a 2 to 1, a 3 to 1. I want to be able to make, $500 for every $100. You got to have a plan. And so my plan is to be around the strategic side. Okay. Now let's talk about this. We'll go more in depth about money management and your position sizing in my next video. But this is how, I wanted to show you how we would start to set up and kind of lead you into that. But this is your risk to reward. And that I wanted to show you how we do that by setting up bracket orders. And you can also set up bracket orders, believe it or not, in options. And if you, I'll show you kind of how to do that again in another video. But this was just a real quick of risk to reward. So we want to always talk about that. Okay. Now the next thing I want to tell you about is, here at Trendy Options, news is important. News is a catalyst that brings price into supply and demand. What do I mean by that? I'm going to actually take you off of here and show you another stock, and that is Tesla. Tesla is really big right now in the news. And Tesla, has come down into, and this is kind of cool. I put this out here on Twitter, kind of if we come over here to the weekly, is you have to be really patient for something like this. And you can see that Tesla had moved, has been in this really bad downtrend for quite some time. But we wanted to identify, and we identified some demand over here. And we identified that, and sure enough, when it came down into it, this is a weekly candle by just so you understand, and this is a daily candle. So when it came into demand, it actually started to pop. All right, so traders took some positions here into the demand, and you can see that it actually worked out there for quite a few points. This morning, buying in the zone there, it actually had risen here out of here. But this is what you see on bigger time frames, and what I mean by news catalyst is that when price is driven into a specific area, it's always bad news. Okay? It's always bad news. That's how they get price to come down into here. Think about that. And then all of a sudden, it's still bad news for a little while. And while you're still, retail trading and you're sitting there, yeah, but this and that about Tesla and Elon did this and he's doing that and those cars are on fire sometimes. This is what the market's doing, right? And then by the time that you finally come to your senses and you take a trade, what happens? That's right. It goes down on you. Okay? It goes down on you. And you say to yourself, I knew it. I knew I shouldn't have bought that stock. It doesn't make any sense for me to buy the stock. I knew it was going to go down. And then smarter money prevails. And by the way, I'll teach you about this too. So this is a down range price usually in a bearish trend drops around the 38.2%, and that's what you get there. Okay. So anyways, that's a little bit about being able to understand news and how it works. Now, how does news work on the opposite end? Well, see this blue line? That is called a trendy edge, and that's called supply. And it identifies supply where traders want to get out of their positions. This is where Tesla could do no wrong, where Tesla is going to 420 and they will be bought out. This is where all the tweets in the world from Elon Musk are just so glorious. And hey, there's nothing that could go wrong. And guess what? This happens. Okay? Understand the psychology of this is backwards. Okay? It doesn't feel right. Just like when it starts to go up and we hit supply or hit one of these bands here, we're supposed to go short. That's where the robotic side comes in, not the emotional side. But 97, 98% of traders are going to be emotional. It's not going to make sense. They're not going to do what they're supposed to do, and therefore they end up losing money. Okay? So I want to teach you how to get to the point where all of this makes sense and where you can become a better trader by being robotic, by using a system, by putting it all together and really understand what we are doing here at Trendy Options. Okay. Now, why? Why? As in trendy. So we went over, so TR3NDY. We went over trend. We went over range. We went over the three, which is 3 to 1, your risk to reward there. N as in news, news catalyst gets you to price, into demand or supply. And then Y, it's all about you, folks. This journey absolutely has been, just saying those words, I could cry. I am a 43-year-old man who I served, 20 plus years in the Air Force. I've done a lot of great things in my life. I was a director at a company, and trading is something that I find to be intriguing. It's a full-time job for me, and if I sat here and told you it's been easy the whole time, it would be an absolute lie. There's no good answer, and there's no, I shouldn't say answer, there's no one system that will make you millions. The Y stands for you. I can teach you everything that I feel that you need to know to be a better trader, but it all comes down to you. Will you execute when it's time to execute? Will you stay in the trade even though the trade is kind of pulling back on you? Will you ride the EMA into the targets? Will you be patient? Will you read into the news? Will you buy a stock because XYZ, the CEO, bought more shares just to find out that the stock goes down? Will you give into the news? Will you give into the other side of you saying, there's no way this is going to work? Right here. There's no way this is going to work. The stock is going down. It doesn't make any sense. There's so many different things that I have been through as a trader. I have lost money. I have lost lots of money. I have made money. I've made lots of money. I've come to a point where um, it's amazing when you can get to a point where it's no longer emotional, where it's just robotic, and you follow the trend. You stay in that trade, and no matter what, you stick to your plan. You stick to your stops, and you carry on. You understand that losing is a part of this game, okay? You have to lose. There is no, if you think right now you came to the trading career to continuously make money, this is not going to be for you. You're going to lose money, but when we lose money, we understand what we can lose, how much we can lose. Does it fit into your budget? Does it make sense? Can you withstand the market? The market doesn't know you're there, folks. Doesn't understand that you're there. It's going to do what it's going to do. If you can survive by having the right money management skills, you will stay in this market. People have asked me before, John, have you blown accounts? When I was younger and I had smaller accounts, yes. I have not blown an account in years. I have been able to survive the market, okay? And how do I survive it? It's because I'm cautious, but I also understand when to press the gas. And it's something that most traders have a hard time with. And as I said earlier in this video, it's very difficult for traders to be patient. One thing that I am good at is being very, very patient. Okay. So in my next video, I will talk about money management skills with options and with just equity trades and how to set those up and what that looks like, and something that better gets you ready to take your first trades and so forth. And I look forward to you being able to watch it. And I really appreciate you guys listening to me. Like I said, this is just an intro into how we're trading here. Um, What I want you to do is be able to take the time and understand that it's a marathon. Okay, it really is. It's not a quick, rich scheme that you're just going to come in here and watch this first video and it's going to work for you. Although, even though some of the stuff I showed you is very, very um, good for your trading routine. I think it's really going to help you. I definitely want to be able to share and educate you more on what to look for in the market. And I look forward to doing that. And I look forward to talking to you in the next video. So please stay tuned for video 2 on money management and options and equity and futures, all that fun stuff. Thank you so much. Have a nice day.